Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
$14.90 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. If you're wondering where to invest those extra dollars that you managed to save during the year and you're not sure, my next guest, Nick Santiago of InTheMoneyStocks.com. Site's been around for 5 years. They are exceptional traders. Nick, how are you?
Excellent, Terry. Good to be with you.
Hey, it's great to have you here, as I tell all my guests, because I really do enjoy every interview that I do, because you people out there need to hear a lot of different views and receive a lot of different information, because there's so much noise out there, right, Nick?
Absolutely. You got to sift through the rubble and really understand what is going on, especially in the marketplace.
Yeah, and there's so many things going on right now that nobody can keep track of them all. I don't care if you had a staff of 50 people. That's probably what it would take. And then you would still have to have somebody getting it together and presenting it in a digestible format. It's impossible. That's why I interview so many people each month, Nick. So your website, what is your goal? How do you help people? If you're looking to invest, why do you go to InTheMoneyStocks.com?
Well, if you come over to InTheMoneyStocks.com, you'll see we put out a lot of free content as well as our premium content. But the reason why we even started the website was basically to help the average trader. And a lot of people will say, well, if you're a good trader yourself, what do you even care about the average trader? And I'll just give you a real quick story. Back in 2003 and 2004, I went and interviewed for a bunch of hedge funds, and I was offered real low-end positions because I didn't have an Ivy League degree. And what happened was I went to my partner, who's my partner now, Garrett Soloway, and I said, hey, we should just create a website and give our information out for free and really show these people what it's all about. And we decided to do that. And once we did that, we were able to predict the 2007 top, not only to the day, but to the price. And we predicted just about every top and bottom in the market since that time. We have a tremendous track record, and we continue to do it on a consistent basis. Most of those hedge funds, this is the irony of the story, is most of those hedge funds that I had interviewed for, which was about 20, 15 of them are out of business today. So it goes to show you, what you give out there to the universe is what you get back. And if you can do the right thing by people and help people, you're always going to, have a blessing above your shoulder. And, that's really why we have this company.
Well, that's a great story. And it sounds like you're really passionate about what you do and how you help people, which is what we like to see here on the Financial Survival Network. So speaking of tops, I want to run several markets by you and tell me where you're thinking, whether we're getting toppy or not, or whether there's more to go. One, the Dow, right? We're at pretty high price right now. Is it getting close to topping, or you think it's going further?
It is getting close to topping. We probably have a little bit of time left before the Dow actually tops out. Right now, we're probably in just a short-term pullback mode at best. But soon, in the next few months, the Dow will probably top out. You'll get a pretty sharp correction in this market. It could last a while. And then ultimately, they're going to, the central bankers will inflate this market once again. So, you're going to have to be a trader. I'm a technical trader, which I prefer to be, because you can really hone in exactly where the support and resistance levels are. You can also study time and where the markets are likely to pivot, and hopefully capture, these moves on the up and down, on the upside as well as the downside when they occur.
Right. Okay. And, technical investing is not for everyone, but if you got the right temperament, it's definitely extremely profitable. So what about the euro dollar? Where do you think we are there? Is the dollar close to topping?
Well, I think the euro dollar, if you're looking at the euro, that is, it's on a one-way train to the downside. I think right now we're getting a decent little bounce, but the euro itself is definitely going to come under major pressure, probably at the latter part of the first quarter of this year.
You think, huh? And what do you see the down for it? You said there's no limit to the downside. Does that mean crash or what?
You could. I don't know if it's absolutely going to be a crash. It very well could be, but to see, a move back down to the 120 level is very possible. 118 level, I think, is real possible by the middle of this year. Maybe even, a little bit, maybe right by the fall. In the fall, you could probably even see a lower level. But right now, the euro is just having a nice little bounce. Maybe it hangs out and holds up for a little while longer, but ultimately it's going to go lower.
Right. Yeah, it's looking like it. And if the euro is going lower, that means the dollar is going higher, right?
That's right. That means the dollar is going to go higher.
Yeah, figured that out, huh? Maybe I'm ready to be a trader, huh? Yeah.
Well, the dollar's had a great move this year, and it's still holding up pretty well. But the central banks are ultimately going to deflate the dollar again. So while we could be bullish on the dollar, for a while in 2012, eventually we're going to have to turn that sentiment to bearish, because the only way the market goes up is when the dollar goes down.
Sure, no question about that. And what about gold prices? And silver, for that matter.
Gold and silver have had really nice moves as of late, but they're both well off their all-time highs, which is good, because that's going to give us another good buying opportunity, I believe, in gold and silver in the latter part of 2012. Once we get the big inflation rally that I'm expecting later this year, you're going to want to own gold and silver. It could be probably the best buying opportunity we've had since the stock market crash in 2008.
And you think that's getting close, huh? We're getting close to that opportunity.
Yeah, I think that, technically gold and silver should give us, one more sell-off, a pretty significant one. And then, we get down to the latter part or the second half of 2012, you've got to be all over gold and silver. They're the ultimate indicator of money creation.
Sure. It's the canary in the gold mine, and the miners have all died trying to hold down the price of gold, and we're left now in this manipulated market where they're going to lose control, and then it's hallelujah time, huh? Well,
that's kind of what gold is always telling us. It's just telling us, really, the Federal Reserve doesn't print M3 money supply. They haven't done so since, I believe, 2004, 2005, and they said the excuse was why they don't do it anymore is because it doesn't fit into the budget. So it's basically telling you, we don't want you to know how much money is being created out there. And gold and silver are really their worst nightmare.
Yeah, and they've done everything in their power, which is becoming more limited, to keep the price down and control it. So what about the Chinese economy? Is that a bubble, or is that the real capitalist economy in the world now?
No, it's not a capitalist economy, because it's still communist. I mean, this is, what the United States went to war over was against communism, and now, they're our best friend. They lend us all the money. So, basically what you have in China is a real estate bubble that is bigger, just as big as our bubble, with the exception of, their economy is not as sophisticated. The deal with China is that the labor is so cheap over there. That's basically the driving force, which, eventually that's going to change too. Anytime an economy matures, the labor force is not going to deal with those kind of wages. I think China right now pays somebody high wages, I think $3,000 a year or something to that effect. That can't last forever. People have to eat, they have families, they have to buy homes, and you have a huge housing bubble in China right now. So I am not bullish at all on the Chinese economy, and in fact, I think it's going to be the driving force that takes us lower this year.
Yeah, it seems like it to me. Their real estate markets are imploding. They've got 64 million vacant housing units by one report. Could be more than that. And they've got all these bullet trains to nowhere, which might be a great thing. And the other thing is too many skyscrapers. When man tries to build too high, you get that Tower of Babel effect.
Yes, the skyscraper index.
Yeah, and you saw it in Dubai. You've seen it in Malaysia. You've seen it in other places. I mean, I do believe the future is Asia over time, but the concept that they have this economy that's working spectacularly well and the U.S. can't do anything right, which I agree with that, in our command and control economy, I think that's really kind of a rose-colored view of what the communist system is all about.
Well, they're really not much different. Their People's Bank of China is really not much different than our Federal Reserve. They just basically stimulate the economy by, creating easy monetary policy, and that's ultimately what gets everybody into trouble. So, I mean, they've done nothing different than, what has been done before. And, all we have to do is just go back and look at Japan. Japan, traded up near 39,000 in 1989, and, they can hardly get above 11,000 today on the Nikkei index. So, at any given time. So, I mean, they've been in a 20 years of stagflation. I mean, this is what we're dealing with in these markets right now. So it's just great to be a trader because you can play both sides of these markets, and there really is no real trend out there. There's no real bull coming along anytime soon. And the bear markets, every time we have a bear scare, the central bankers come in and they inflate the market up. So it really is a great trading market.
Yeah, I can see that. I mean, I see the resource stocks. At any given time in a year, these junior miners will double, and then they'll go back to where they were. And it's almost becoming too predictable to watch them and to see them do that. So, and I guess the final question is, if you've got money, not a lot, let's say you had $5,000 and you were looking for a safe place to put it, and you had a little bit of gold, what would you do with it there, Nick?
Well, I'd be buying silver. To tell you the truth. It's cheaper than gold. It's used in the industrial. It's an industrial metal as well as a precious metal. You get double bang, the best of both worlds. So, come the middle of the year or the latter part of 2012, I'd buy some silver.
Yeah, I kind of agree with you there. But let's say you're fully invested in metals. Then what do you think you do?
Well, then, you wait for these inflation rallies and you buy the S&P 500, or you buy, a stock like Apple or Amazon or something, Google, that's going to move with the market. It's a big company, and you just play the inflation rallies. That's really the key to this entire trading universe right now, is just catching the inflation rallies, and then when they peak out and, they're just too exuberant, you go short. But shorting for a lot of people is very, very tough. But you buy the S&P 500 or you buy the diamonds, and when the central bankers come in and they inflate this market, you jump on board and you ride it up. And when it technically looks like it's at an exhaustion point, you get out, you get off the train. Yeah,
that makes a lot of sense, and it's just knowing when to get on the train and when to get off. But I think inflation and the possibility of a crack-up boom will drive the stock market higher for the foreseeable future, with some pullbacks, with some corrections.
Well, you're going to get a big scare. I believe we're going to get a big scare in 2012. I think we're going to get a big, big scare in 2012. This market is just too complacent right now. If you look at the intraday action, every dip, we fall around between 10 o'clock in the morning and 12 o'clock in the afternoon, and the market just gets inflated higher off the lows. I mean, yesterday was a perfect example. We sold off, and then, they just inflated. When I say they, the institutions came back in and supported the market, and basically the day finished unchanged. Even today, we had a pretty good sell-off from the open. The market dipped really till 12 o'clock, and then the dollar starts to fall intraday, and the stock market starts to evaporate to the upside. We see it every single day. The complacency out there right now is there is absolutely zero fear, and everybody believes that the central banks have their complete control right now, and there's nothing wrong. That will not last.
Mm-hmm. Yeah. So what do you think the impact of Fed and governmental manipulation in all of this is?
Well, the impact for a trader is trader's paradise. The impact for the economy is you don't have anyone really willing to invest anymore. So, I mean, things need to just bottom out and actually hit a floor. And, you're going to have real money come in that's going to be in for the long haul and sustainable. But when you do all of these different types of bailouts, week in and week out, whether it's Greece or Portugal or Spain or Italy, or if it's General Motors or if it's Goldman Sachs, it doesn't make a difference. You continue to bail out, cure the debt problem with more debt. It's unsustainable. And something's eventually going to give.
Yeah, that's what it seems like to me. So any further advice if you're an investor and you're looking for safety in 2012?
Well, wait for a significant market decline and buy some gold and silver. That's really what I would do. Ultimately, if you're really looking to play this market on any major dip, and there's a lot of fear out there, step up and buy some S&P contracts, or buy the diamonds or something like that, or the spiders, and you play these inflationary rallies. I mean, since 2009, the central banks, and it's not just the Fed, it's all of them, they're just going to continue to create money or create easy monetary policy, and you play those bounces. That's really the gist of it. And as long as there's a currency that's still working, I mean, you're going to be okay.
That's a big if there, Nick. I mean, the way we're heading and the recklessness, I never thought I would live to see the day where 43 cents of every dollar the federal government spends is quote unquote borrowed, which means that most of it's printed. I didn't think I'd live to see that. And yet here we are. And I don't want to insult drunken sailors because they're much more rational than our Congress and our leadership in Washington. But maybe they're worse than drunken. Maybe they're hooked on crack. I don't know.
Well, it just goes to show you that the problem is still a problem. Nothing's been solved. There's no solution. They just, the debt ceiling is constantly raised. I don't even know why they even have a debt ceiling, but it's not to laugh at it because it's not funny. It's a serious problem, but nobody here really tells the truth about what the problem is. You got a handful of people out there that are really talking about it, and unfortunately, this is the society that we live in. So, as a trader, I hope this system never goes down. And I could profit off of it for the rest of my life. But unfortunately, I think everybody should have a little gold and silver tucked away just in case.
All right, Nick. Hey, where do we find you on the internet?
Yeah, come over to inthemoneystocks.com. Check out our website. You'll see all of the content that we put up there each and every day. And come over, take a 7-day free trial. You'll see what we're made out of. And hopefully, most people that come into the In the Money Stocks community really never leave.
All right. Sounds good. We'll look forward to speaking with you again. Thanks for the info. It sounds like really common sense, well-grounded advice.
Thank you, Kerry. Have a great day.
You too.